And I think that's the other thing people don't do that you may want to do is do simulations and back tests. Now that automatically scares people. Say, I don't know how to do that. Well, you can actually do it with Excel without doing any fancy work. Your work can get fancier and fancier as you learn how to do this, but you could do it like this. Say, all right, how many trading days are there in a year? There's 250 trading days in a year. How many trades do you make per day? Let's say you make 50 trades a day. You're going to make 12,500 trades. Trade journals are great. Yeah, trade journals are great. The only problem with the trade journal is how much time it takes to maintain. But other than that, I would recommend them. So this isn't a back test. This is more of a simulation or a calculation. But you can make this as sophisticated as you want or as unsophisticated as you want. But you probably can get most of the point without much of hard work. And one of the best things you can do is look at your trading results for the year, any given year, and tax time is a good time to do that anyway. Let's say this is it, 12,500 trades a year. There's a lot of ways to do this, but one fun way to sort of do it is say, okay, I'm going to do winners, washes, and losses. Okay, so let's assume that you have, well, we can even make some assumptions here. 35% are going to be winners. 30% are going to be losers. 30% are going to be a wash. I mean, if you're market neutral, I'm not sure there's any given year you could say everybody made money or not, but regardless. So what's the average size of my trade? Well, I don't know. Let's say my account size is $1 million. And the average size of my trade is 2%. My average trade is $20,000. Dollar size of trade. And then you could also have, win rate. My win rate is 50 basis points. Or my win amount or something. So we know what the win rate is. And so number of win trades is this. And it's kind of amazing, right? Like you with a $1 million account, you may make $87 million of trades. 20,000 bucks, 4,000 trades. Yeah, sounds right. Dollars in wins. And how much did you make? $400,000. Now, if you only had wins, you'd have a nice 40% return. The washes you don't even have to do them, I don't think, right? And now the loss rate, well, same concept here. And these are losers independent of longs or shorts. So you lost $70 million. You had $75 million in losing trades. And you lost $375K. And you made 6% for the year. So if you're okay with this, this is like an implicit DCF. This is what you have to do. And you can see that you say, well, this isn't that good. This is not what I want. This is not risky enough. I don't want to make 6%, right? So now you have to decide, well, what are you going to change? What happens if you do 100 trades a day? Well, now your profit doubled. What happens if you do 150 trades or 300 trades a day? Well, your profit's going up quite a lot. Okay. Well, you say, I'm only human. I can do 100 trades a day. All right. Well, something else has to change if you want to be a big winner. You could take more risk, double the size of your trades. Now you're up 25% for the year. Okay. You squeeze out some more wins, make this 36 instead of 29. Well, your profits are even higher. Obviously these things will impinge on each other. Make a lot of stop losses for the losses and let the winners ride. Well, now you're really killing it. If you can do that, you triple your money. But it's very, very hard to do. Look at the impact even 10 basis points has. 5 basis points makes a huge difference. So doing this just lets you kind of have a sense for okay, what do I actually need to accomplish in my trading? Do I need to trade more? Do I need to trade less? Do I need to make more when I make? Do I need to, hold my positions longer? All this stuff. Yeah, of course you can't have a job and do this at the same time. No, you should drive a truck and trade your money at the same time. Work at McDonald's and go trade at the same time. I'm talking about professional investing, not you in your spare time in your 401k, buddy. Yeah, this is all high tax strategies, but obviously if you have a fund, you're going to have some tax-free investors and stuff like that. You know, I make money by, like I said, focusing on what I believe is the fair value for any given company. And I trade according to that, and I'll let the rest of the world bother me. And I make trade-offs. You know, my trade-off is I get more time to focus on what I'm good at. In my opinion, I could ignore the randomness of macroeconomics and politics and all that stuff. It doesn't matter to my portfolio really, because I like to have longs, I like to have shorts, and I don't need to worry about something I'm not really good at. Who's really good at deciding what's going to happen in the macro? That's not me. Now, if you're really good at that and you care about it, yeah, watch Powell. But if you're a fundamental investor, what are you doing? You're wasting your time. You could be looking at a new stock, a new potential company with serious alpha, new product launch, something. And yeah, that your portfolio is going to be affected by the macro, but it's your job to neutralize that. If you only have shorts, buy some SPY. If you only have longs, short some SPY. You can hedge out the beta. I never did Value Investor Club, sorry. Amazon is calling out. Yeah, it's Quantum Wars. Where's Amazon doing this call out? Everyone's calling out Microsoft. They're haters, man. They can't deal with the topological qubits, state of matter. They just, that works, we're all dead. Satya's like, it works. Well, first of all, Amazon's not really known to be a qubit quantum computing expert. Amazon doesn't have too much respect in that area yet. Now, IBM is probably saying it too. 𝗍𝗏𝗡𝗏, CRM company. You buy a put option for $3 and sell it for $20, you make a lot. This account went from 100 grand to 2.4 million, just shorting basically. So shorting can be very profitable. Not really 901. It's a big difference between running an API and running a successful quantum computer. Listen, even like I was saying earlier, I think I was talking about this in Godel, most professionals are too scared to short. Even the most fearless short sellers I know are scared. I love that they say this. Tech companies have been working on quantum computing for years. The hope is to one day create machines that enable significant strides in area like drug discovery. Hold on. Did anybody ever ask somebody, do you guys in drug discovery need this? Because I have a comment. Or chemical compound creation. Who ever asked do the quantum people ever talk to the drug people? We don't need this. No, the article is why Rigetti dropped. He said Microsoft's technological achievements are impressive, but insignificant compared to what is needed to create a useful quantum computer. Scott Aronson has not been accepted. This paper has not been accepted by peer review. Oh, here's Amazon. Quantum computers may not be commercially viable for 10 to 20 years. Ooh. Ooh. Rigetti doesn't have 500 million. Look at the balance sheet. What 500 million? You know how to read balance sheet? Here, let me help you out. This is how we do it. We go to RGTI, equity, CF, enter. Okay, they didn't file their 10Q yet, but we have this thing. We're going to open this. We're going to read it. We're going to go to the balance sheet. Oh, okay, here it is. This is the balance sheet. Let me help you out. Cash, 67 million. You see that? Cash. Investments, that's 124. What does that add up to? 191, 192. Okay, and there's some more cash here. It looks like it's 217 total. Okay, 217 million. It's going to need a lot more money than that to get to quantum computing. Remember, about half of that money goes to overhead. It's the cost of being a publicly traded company. I know all about that. That's at least 20, 30 million a year. And they're only spending 60 a year. So really, they're spending 30 million a year on quantum computing. Think about that. To crack the hardest problem known to humanity. You think you could do that for 30 million a year? That's it? Well, I have an ATM, but they have to hit the ATM. Everybody has an ATM. Doesn't mean it's money in your... The ability to sell your stock to your investors, I mean, you have that cash. It's not on your balance sheet yet. You might be able to rinse some people, definitely. I mean, they're a publicly traded company. Basically, they can keep selling stock to shareholders forever. They did at $1.70 recently, or $1.50, I forgot what it was. They sold a bunch of stock. They looked at the stock at $1 something. They were like, yeah, let's sell. We need this cash. Big catalysts on the horizon. Come on, man. Well, this could be a good short. This could be a real good short. Thank you. See, it's people like Code on Fleek that give me some of my best ideas. That's why I love this community we're building. I should pay some of y'all. For real, for real. If you type some good in Godel, I might start giving out some coupons, rebates. Might start giving you creator, you know, like a creator. You're like the Mr. Beast of stocks. Deserve some paper for that. Thank you, Mr. Beast. If you're the Joe Springer of stocks, but you're consistent, you still get a stimmy. I subscribe to Joe Springer. I'm waiting for the next big call, baby. He doesn't want to put out something. Next big Springer call, I'm all in. You're a consistent bag holder who's like very good at being bad. That's worth more than the guy who's good at being good. We keep paying you. No, our options product isn't where it needs to be. We hired a guy just to do options, who's a master programmer. And we have I repurposed another guy to just focus on options. So we will have a better options product than LiveVol. But it's going to take us a few months at least. I mean, we have options, but it's not that competitive, quite frankly. But we will. I took somebody off one team and put them on the options team. That's what repurposing is. I had dinner with a guy last night. He's a big biotech guy, and he said he doesn't believe NACTRAB has any money. Because, I mean, he's acting too much like a baggie to have real money. I mean, if you're really so rich you can throw 70 in a biotech because to zero, you maybe have $1 million or $2 million in some hedge funds, biotech hedge funds, and you ask them for advice. Hey, man, you know, you guys have been doing good for me, but you ever heard of this cassava? And they're, oh, okay, bud, thanks. There's no 𝗡𝗡𝗅𝗍𝗍 for me, man. I'm going to make billions of dollars making the best financial software company the world's ever seen. Hopefully. That's the goal. It's not easy. There's a lot of financial software companies. There's a lot of competition. Believe it or not, it's close to $1 trillion space. It's one of the biggest spaces in software. People don't even know how big it is. Nobody wants to compete in it because the perception is that it's hard to compete in it. But yeah, Braden, I mean, I don't know about 500K, but you got 5 million in a hedge fund, biotech hedge fund. I mean, they'll give you an opinion if you run. You can't bother them every day for the rest of your life. But if you're putting 70 mil in it, they'll just talk to you in general. Yeah, Joshua, a very small player, but yeah. Most of the money in financial software is business to business. I mean, almost all of it. I mean, I want it all. I want to help all investors, but we have an investor deck. I mean, we show that to institutional investors and high net worth people. Millenium minimum, it's pretty big. I want to say like 100 million, but you can get into Millenium through some other feeders and stuff like that. Yeah, I mean, I'll go to medium net worth investors if they don't waste my time. You know, we're scaling pretty fast. I think Quanta is, Quanta wants to be, but yeah, Capricorn sounds like a good one to look at. Oh, we're going to have fun with this one. If we do this, we're going to call it the capper. It's all cap. Literally cap is in the ticker. Why would you buy something with the ticker is cap? And then we have INMB, which is like true fraud. Bladder cancer is a big market. Discount rates, I mean, determining the discount rate is the core function of finance. That is the whole point. Like literally the entire field boils down to that question. Do you hear AI.com is maybe going to go for $100 million? Google will buy it, or OpenAI, or Microsoft, or AI.com. Could you imagine that bought it for $8? The guy who owns it keeps pointing it to different websites. So he keeps changing it to the different websites he wants them to buy it. Isn't that funny? Well, he hasn't sold it yet, so that's pretty funny, right? He's basically saying, look how much traffic you're going to get. I know you want it. Oh, I switched it over. Now it's going to OpenAI. Now it's going to Anthropic. I bet you one of the dumber companies like Anthropic might do it. I don't know if they're dumb, by the way, but like Salesforce.com, I think. We need to compete in AI. Yeah, it's hard to know what domain you should buy. Pretty tough to figure that out. Sometimes you can buy a domain that the company doesn't have. Like a good example would be Majorana.com. It should be owned by Microsoft. It ain't owned by anybody. Owned by some Chinese wholesale something or other. Yeah, just be careful with Claude. Mine filled some of my data with random data, which was really frustrating. I didn't want that random data. But no, I mean, I think AI is going to help all of us make better trading tools. And I'm going to make them for you, so you don't have to lift a finger. But if you want to go ham and try to do it yourself, you can. I'm going to give you guys algorithms you could just plug your account into and just print money. Let's go. You're going to have huge returns. Huge returns not guaranteed. You're going to have no drawdowns. No drawdowns not guaranteed. You will have drawdowns. One of my lawyers, outside counsel, was indicted with me, which is really a shame. And I'm going to write some letters and see if I can get him a pardon, because he really didn't deserve it. You will never be a baggie again. You'll probably be a baggie. Baggie advice not guaranteed. Stop holding the bag. on some stock you read about on Reddit. Start being smart. Well, I'm in the 𝗏𝗏𝗘𝗦 subreddit. It's not as bagholders as I would like. Cassava was some bag. That was bagholders. I hope we get another one. I know we'll get another one because that's just. I don't know if I've seen so many on Reddit, but like I've seen some bag holders in my time, man. Mankind was a big one. A lot of these were message boards before Reddit, like Yahoo Finance had a lot of these. Even Investors Hub was a big one. I was short these stocks like NVIDIA, which was called Neoprobe. These are really like self-help groups. They were self-destruction groups more than self-help. Oh, 𝗓𝗎𝗓 must have some bag holders. Self-bagging. Okay, so we don't have a model for Saudi Aramco, Berkshire Hathaway. We just did make one for Walmart. We don't have one for Mastercard. I think we should do one for Mastercard. It's a fascinating business, actually. We did make one for Costco yesterday. We don't have one for Exxon, and we don't have one for Procter. So Procter & Gamble, Mastercard. I mean, LVMH and Hermes could be interesting too. Coca-Cola and T-Mobile. Let me do a straw poll. So we got Mastercard, Procter & Gamble. We got a foreign stock, which is LVMH. I remember when Mastercard came public. Every Tiger Cup was in it. 50x. Crazy. There's some rich people in Europe. It's not all poors. Okay, Mastercard's 10K just came out with their Q4 results. Nah, there's some rich-ass Europeans. But, you know, things are changing. Europe's got to get its act together. That's no doubt about that. Yeah, all the 𝗏𝗏𝗘𝗦 calls I bought are green. All right, so what's up with Mastercard? We've got revenue, earnings, and stuff like that we'll look at later. But the biggest thing we're interested in is some of these other metrics. So there's gross dollar volume, which was 9.8 trillion. Cross-border volume and switched transactions. Now, I don't know what that means, but these are all numbers in billions, which is crazy. So in terms of gross dollar volume, consumer credit cards were 34, so 3 trillion. Consumer debit, prepaid, 4.8 trillion. Then commercial credit debit was 1 trillion. Cards. I'm just going to add up all the cards. 2 billion cards. 2 billion pieces of plastic. I recommend you print this out and read it. Wish I had the time to do that myself. Oh, I see. It's over here. Got it. Okay, Michael Miebach, 57. He was the president of Middle East and Africa for 5 years. Okay, so revenue, 28 billion. Last year, 25 billion. Year before that, 22 billion. So kind of crazy growth for a somewhat boring company. I mean, 12, 13% revenue growth is pretty solid earnings growth. Shares outstanding, 927. So market cap, 500 billion. Making it's got to be the top 20 in the world, right? 17th biggest company in the world. 17. So this is wild, the margins. It would be funny if 𝗏𝗏𝗘𝗦 bought strategy stock and strategy stock was buying Bitcoin. It'd be like such a funny doom loop of leverage. So Mastercard doesn't report cost of goods. So they just have this massive operating margin. Like, yeah, we just take this toll, man. We take this $17 billion toll every year. That's it. Yeah, I was just saying this Mastercard's kind of a simple company. Just a little more than meets the eye, but like 14 billion net income last year. It's a financial company, so you always got to make sure you're not counting the customer's money as yours. Did security deposits held for customers. Let's not count that. Okay, so it's not too levered, pretty normal operating. So we got a $500 billion company making 14 billion a year, but at least, you know, there's pretty rapid growth here. So I'd rather pay 36 times for this than Costco. So cash flow looks, just eyeballing it, looks similar to net income. We're looking at Mastercard. interesting, like capitalized software is actually bigger for them than CapEx. This is the amazing thing. We're going back to what we're talking about with capital. This company, Mastercard, has almost no capital whatsoever. They're just literally making free money nonstop. And I think it's like just the difficulty of retailers doing something different. It makes it really hard for them to change things. But I think, for MasterCard, it's about maintaining more than it is growing, but the valuation implies that they'll grow. How do you get retailers to take a different form of money, if there is a different form of money? Square, Stripe, PayPal are all going to try really hard. The payments, you're talking about $1 trillion of market cap that could be disintermediated. The question is, who's going to pay for fraud and chargebacks, right? That's what MasterCard kind of does. That's kind of why they exist, to be frank. So I do want to do a deep dive on MasterCard and payment processors at some point. It's a very weird space. You have to dig in pretty deep, but I do think it's going to be worth doing. It's kind of an indestructible company. They're growing earnings 20% plus every year. That kind of grower is fairly, there's nothing that's going to disrupt it. It's very hard to see that getting disrupted. So it's been a perennial long for everyone. Every fund has been long this thing forever. The question is, when does it all come tumbling down, if it ever comes tumbling down? Which obviously management's job is to make sure that never happens. I think we're at $60 a month right now.